Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock. With news, the way bankers are being paid is about to get a major shake-up. But first, the US Fed reports their economy expanded at a modest to moderate pace between mid-February and the end of March, and inflation pressures remained in check. This is despite more difficulties in attracting and retaining workers that is putting broad pressure on wages in firms increasingly who report trouble filling low-skilled jobs. In a couple of regions, worker shortages and increased labour costs were restraining growth in some sectors, including manufacturing, transportation and construction, the Fed said in their latest Beige Book review. The IMF's latest financial stability review has pointed out that a quarter of American firms have gone on a debt binge to take advantage of low interest rates and they make up a significant threat to financial stability in markets and for banks if there is a significant rise in interest rates. The ability of companies to cover interest payments is at its weakest since the 2008 financial crisis, according to one measure. The situation also undermines the Trump assumption that tax cuts would lead to higher corporate investment. In an era of raising rates, they may just allow some to hold on, leaving the government with higher debt levels and not seeing any economic upside. Voters in the Indonesian capital of Jakarta have ousted a close ally of the country's president in mayoral elections, replacing him with a candidate riding a wave of hardline religious support that has upended politics in the world's largest Muslim-majority country. This result will have policymakers in Canberra reassessing their positioning in Indonesia. And staying in Australia, major changes on how retail bank employees are paid are about to happen. Sales and commission payments are out, and very large changes are about to hit mortgage brokers. In a major review that has been accepted by the industry, banks will scrap performance incentives based on meeting sales targets. It recommends banks immediately cap the contribution of sales targets to 50% of any incentive, falling to a third by 2020. It also recommends banning any form of accelerated commission structure and a host of payments for mortgage brokers in anticipation of a fee-for-service model emerging. Soft incentives like overseas travel and sales conferences are out. It's all about addressing the fast declining level of trust customers have in traditional retail banking, and comes at a time when banking disruptors are gaining strength. In New York, the US Treasury 10-year yield is back up today, now at 2.21%. Oil prices are down sharply by more than $2 and now just under $50.50 for the US benchmark, while the Brent benchmark is just under $53 a barrel. This is due to the combined impact of higher than expected American petrol inventories and data that shows producers aren't cutting production at the rate they said they would. The gold price is also lower by $8 an ounce and now at $1,282 an ounce. New Zealand dollar is marginally lower as well, at 70 US cents. Whilst in the cross rates, the Kiwi dollar is up again to 93.4 Aussie cents, but against the euro we have slipped a little to 65.3 euro cents. The TWI is now down to 74.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.